How's it going, everyone? It is Andre Williams, and today we're going to be talking about CTRM, Castor Maritime. This is not the first time we spoke about this on the channel, but I want to bring something to your attention. There was an article talking about a potential short squeeze that is coming up and some of the catalysts that we need to take a look at that's going on for CTRM. And this means everything that happens in regards to the post-pandemic, when vaccines get rolled out and things going back to normal. Also looking at the demand inside the industry, and also looking at changes that's going to be happening in the Biden administration in regards to what can actually help CTRM. So let's go through it, and I'll give you guys my final thoughts afterwards. All right, so we're going to be going over the article that was released on February the 25th, short squeeze incoming for Castor Maritime. I'm going to get straight to the point and just read out the things that we need to know. So what does Castor Maritime do? So like we said, this is pretty much the dry bulk shipping industry, right? Logistics company founded in 2016 and is based out of Cyprus. Castor primarily ships bulk commodities such as grains, coal, and other minerals, and ships supports all over the world. It began trading on the Nasdaq exchange in 2019, and it's seen its market cap grow to over 560 million. So these are things that, hey, that's actually good to know, and seeing what Castor Maritime is all about as far as how well they've been doing when they've been open. Now let's take a look at what they're saying about the management team. We love to see a management that is dedicated to the company, and the founder of Castor Maritime, Petros Panagirios, sorry if I butchered the name, is still the CEO and CFO today. The other members of the board of directors have extensive work experience in Greek business and the marine shipping industry, so the executive team provides a strong foundation for future direction of Castor Maritime. If you ask Panagirios, the shipping industry also runs in his blood. His father, Gabriel Panagirios, is a Greek shipping magnate that is listed amongst the world's billionaires. His sister, Ismini Panagirios, is the owner of a global shipping fleet management company and also offers vessel repairs and maintenance. There has even been some talk of the brother and sister merging the two companies to further their reach into the industry. Again, this is something to really take into consideration as an investor, or you're thinking of being an investor. Needless to say, Petros has plenty of support and plenty of money to back him up, and knowledge and experience within the family that should serve him well over the long term. The reason why we need to take a look at that even further and why it's important, because if you're really trying to get far with a company, you want to make sure that you can leverage your existing network. And as we can see here, the CEO and CFO, who's pretty much the same person, the shipping industry runs in his family's blood. His father being a billionaire, and again, his sister running a repair and maintenance for vessels as well, is key for success and key for growth, because he's pretty much covered. If he needs to get any of those vessels repaired or needs something get looked at, he can go to his sister. If he needs access to capital, maybe some connections to get to know certain people or talk to certain people, he has his father as well. Let's continue. So why we are excited? Where do we start? Castor Maritime is already profitable from 2017 and 2019. Which is rare for such a new company. We repeat it, it is already profitable. And I guarantee a lot of this has to do that it runs in his blood, it's in his family. We cannot stress how important that is, especially when moving forward into the future. Revenues and net income fell in 2020 as a COVID-19 pandemic wreaked havoc on the global trade and shipping industry. That isn't a surprise, and in fact, we should have expected it. Revenues still increased year over year from 2019 to 2020, and with its fiscal Q4 earnings report still to come, Castor Maritime has already grown its revenues by 35% during the first 3 quarters. We actually talked about that and covered that on the other CTRM video that I did, so you could check that out as well. Let's continue. Assets. Castor Maritime has had a busy first 2 months of 2021. As it acquired several new vessels on the second-hand market to bulk up its fleet. Castor ended 2020 with 6 vessels and has since doubled their fleet to 12 ships with an aggregate capacity of 1.1 million DWT pennyweight. Castor's total fleet now includes 1 capsize, 3 Kamsarmax, 6 Panamax dry bulk vessels, and 2 Aframax tankers. Panelidis has been aggressive with his expansion and is wielding the capital that he has access through his father. Like we were saying again, he has access to those financial resources, which is key for growth, in anticipation of the reopening of the global shipping industry. Here's a quote from Panelidis himself. "We are very happy to announce the acquisition of our third Kamsaris Max dry bulk vessel and remain committed to our plan of steadily deploying capital and growing our fleet. Upon completion of all of our recently announced acquisitions, our fleet will consist of 12 vessels, doubling in size since the beginning of 2021. We are working diligently in identifying and taking advantage of attractive opportunities presented to us across vessel sizes and segments." Despite all of this, Castor Maritime has been able to remain relatively debt-free and has not relied on creditors to purchase its new vessels. This will be favorable for Castor moving forward, as a low debt-to-asset ratio means a shorter path to profitability. And profits are what investors see. That's what we care about, all right? Castor also has impressive 33% gross margins and 23.7% operating margins, which are both surprisingly high for the industry, comparing it to an industry rival, Navios Maritime Holdings, which has had a gross margin of 25% and an operating margin of 15.98%. Castor is set for long-term profitability with high short-term upside. I guarantee that the network that Castor has in regards to capital and in getting pretty much having contacts with the right people gives them this advantage. Let's continue. One more point is that Castor Maritime has gained a lot of support from institutional investors. So this is huge. We get to see where the big money is at and where the big money is investing at. And when the big money is investing in certain companies, it's something we got to keep an eye on. Let's continue. Several investment management funds have added Castor, including Hudson Bay Capital Management, Intercoastal Capital, and Empery Asset Management, all with over 13 million shares each. While institutional investors are certainly not an indicator for future success, all three of these had these positions in 2021 since Castor expanded their fleet. Thalassa Investment Co. is another large investor and has an investment fund run by Panelidis himself. Now that is faith in your own company. So just seeing that alone, showing that, hey, the management is vested in this company is huge, right? We know they're going to work day and night, blood, sweat, and tears to make sure that this company is running well. Let's continue. So what about the shipping industry? The dry bulk shipping industry is the largest shipping industry in the world by total volume of goods transported. You would think that given its importance to the global trade industry, that it would have a fairly strong case to be a consistent performer. Well, the last decade has actually been a downturn for dry goods shipping, but industry experts are already giving bullish sentiment for 2021 and more. The Biden administration should reopen global trade routes, specifically those that route through China, which is the center of global manufacturing and trade. With China's economy reopening after COVID-19 faster than others, the demand in dry bulk goods shipping has once again returned to near pre-pandemic levels, which should bode well as other major economies open up through the year. Looking at stateside developments, the Biden administration has put a focus on domestic manufacturing and infrastructure improvement. With an emphasis on reopening global trade and a higher demand for raw materials to use in the United States, the maritime shipping industry may be headed for a boom. Specifically, materials like steel and cement, which are major exports of China, would be in demand. And there is no better way to ship these across the ocean than by shipping vessels. So you get to see where CTRM is definitely in a very, very good spot right now where they can capitalize on this opportunity presented from the Biden administration. Also on top of the fact of looking at how are things going to look after COVID-19 and when vaccines start rolling out. And then on top of that, we already know that China is already beginning to open up as well. So considering that they take up a huge part of in regards to global trade, again, this is a very, very favorable environment. So in the article, they're also talking about a bearish case, the downside of things. All right, so let's take a look at that so we have an even argument here. So the bearish case for any stock or company you can find, Castor Maritime is a small company. Let's not mix our words. It is poised for rapid growth as the global maritime shipping industry reawakens from the pandemic. But there are some big fish in the industry, as the aforementioned Navios operates 55 vessels and Sea Energy has 11 of their own and a recent acquisition on February 18, 2020. Competition in the Greek shipping industry is fierce, and Castor has its work cut out for them. Indeed, there are some naysayers out there as well, since Castor has an incredibly high short float with over 35 million shares shorted as of the end of January, which accounts for 1,486% of total shares. The reopening of the shipping industry also will rely on COVID-19 more or less going away this year, which is correct. That's why these vaccine rollouts and getting this whole thing under control is crucial. Let's continue. But if there's another wave, it could cause further damage. With bulk dry shipping rates skyrocketing and the amount of vessel acquisitions, Castor Maritime could see this stock soaring to its 2019 high of $7 to $8. So that's definitely what we're looking at on the upside here. All right. So the final verdict. What are they saying at the end of this article? Castor Maritime has done everything in its power during the COVID-19 pandemic to grow its shipping fleet and expand operations. And you know what? It's working. Especially after Biden just approved the supply of rare earth metals used to make important products, positively affecting the dry bulk market. The earnings report is expected March 8th, 2020. We are expecting a huge positive jump, which could cause a short squeeze since the overall short is about 1,400%. Revenues are up year over year and have been growing at an average rate of 41% per year over the last 5 years. Earnings per share grew 210% year over year and are trending upwards with the growth in vessel count and high margins that they boast. Castor is on the pace to smash their fiscal year Q4 earnings report and have a strong balance sheet even after purchasing 6 new vessels this year. Combined with the fact that the global bulk dry goods shipping industry is expected to have its best year in nearly a decade, and it's easy to see why investors are excited about Castor's future. The stock has already surged by over 500% in 2021 and has a lot of room to grow still. Castor has also regained NASDAQ compliance, which means that institutional investors will continue to add stock to its funds and portfolios, driving up demand as the supply of shares dwindle. Finally, check out the short percentage. If there are any more bullish catalysts like a good earnings call or lower COVID numbers or reopening of economies or Panelidis continuing to be aggressive in buying vessels, the stock could surge, causing a short squeeze. It's only a matter of time. Shorters should be careful. This company has a potential with other marine shipping companies such as Eagle, SBLK, and NMM and SB. So again, I really liked reading this article, and it gives us a good idea of what we can look forward to as CTRM investors. All right, so like we were reading in the article, they were talking about institutional ownership. So let's dive a little bit deeper and see what that's actually looking like. So we're on fintel.io for CTRM Castor Maritime. So as we can see here, green rows indicate new positions, and then also the red rows indicate closed positions. So just keep that in mind. So now let's take a look at this. So for the month of February, look at the amount of new positions that have been made. We can even take into consideration January the 19th, but let's just start off at February the 2nd. Everything that's green indicates new positions. Let's see if there's any institutions that we're familiar of. So we see Royal Bank of Canada. It is one of the biggest banks in Canada. We also have Citadel Advisors, another big firm. Morgan Stanley, another big firm. We also have Barclays, another big firm. So considering in this period of time, we're going to be taking into consideration February, we've only had 2 firms that closed their positions. But look how many that we have are green, and then look at the amount of shares being purchased. Virtue Financial, almost 300,000 shares. Savvy Management, 2.8 million shares, right? Let's look at Anson Funds Management, 4.9 million. Civi Holdings, 4 million. So I'm definitely seeing that a lot of institutions do believe in CTRM, and it's one of the indicators that we need to look at. All right, so my final opinion on CTRM, I could definitely see some upside potential here. I already have built out a position in it, but I'm definitely not looking to add more unless it hits a particular price points that I'm looking for, which means somewhere in that 80 cent range or the low 90 cent range, I will add a little bit more. If I don't get that, then I won't add any more than I currently have. I also want to put in the disclaimer. I'm not a financial advisor and this isn't financial advice. So just know when you do invest, you're doing it at your own risk. Whether you're a you're trying to do a long-term hold, you see the upside, that is great. Then that means in regards to the price action you're seeing right now and the current price where it's at $1 is not a bad price to actually take a look at. If you're doing a short term or you're doing a swing, then I would definitely be patient. And also, if the market conditions continue like it was for the past week, do expect that there might be a pullback as well. So definitely start looking at how you want to put in your position. I would highly suggest not doing a lump sum all at once. I would literally spread it out. You could do this over days or you could do it over one day. It's going to be up to you and at what's going to make you feel comfortable. All right. Hope you guys found this helpful and I'll be talking to you guys real soon. Peace.